The UK is seeing some movement in the housing market after the Bank of England cut interest rates earlier this month. It's the first cut Great Britain has seen in more than 4 years. Now, home sale inquiries in the UK have jumped nearly 20% from a year ago. Officials are also reporting the number of homes being listed rose by 5% in the same time frame. Here in the U.S., the Federal Reserve is hinting it could cut rates as early as next month. Right now, the key rate in the U.S. stands at 5.3. CBS News contributor J.D. Durkin is here with me in Studio 57 to break down what's happening. So first of all, let's talk about how much we can compare England to us. I mean, is it apples and oranges, or are there some comparisons?
I like apples to oranges. They're both fruits. They're just not the same fruit. I mean, we've had many central banks around the world. They've all been contending with inflation, which we cannot forget, Lindsay, has been a global phenomenon. I know we're in the heart of the presidential election cycle. There's a lot of partisan finger pointing at the other side of the aisle, but this is something that, given the supply chain snarls that the entire world went through with this anomalous once-in-a-lifetime pandemic we had a few years ago, we have had to see central banks all around the world kind of manipulate their own short-term interest rates in an effort to cool private sector spending. Now we're at a point in that evolution and cycle where some economies that are stronger, like ours, are now in the point where they say, hey, we actually think that we've been successful in the war against inflation. The same cannot be quite said yet for central banks around the world. So we're on kind of a different timetable a little bit. So I like apples and oranges. Not exactly the same, but some similarities. I'm
going to ask you a loaded question, as I have a bad habit of doing. It's been reported here on our show that when the Fed does meet in September, it's not only likely they're going to cut rates, but they may even cut by 0.5%. So is that still the thinking? And is the housing market immediately going to see an impact? Because we've also reported on this show that mortgage rates won't necessarily fall.
I'll take the second part first.
Okay.
These are lagging indicators, so they are going to take a while, much in the same way that when we had the 30-year fixed-rate mortgage go up to 8% about a year and change ago, it took a long time for that progress to work its way sort of through the digestive system of the economy. I think the reverse will be true now that we're in the era of interest rate cuts. I am still in the camp, based on my reporting, that we're more likely looking at a quarter percentage cut. In other words, 25 basis points. It's just the fancy Wall Street parlance for saying 0.25%. And the reason I argue that, and other kind of economic advisors I've spoken with, is because if you look back at the interest rate increase cycle that started a few years ago, they started small. They started with 0.25%, and then at the end of that hiking cycle, they went back to 0.25% with some of these jumbo rate hikes in between. I could see that now working itself in reverse. We'll start small and then go from there.
Okay, we'll go from there real quick. The European Central Bank cut rates in June, then held them in July. Do you see that could happen here?
Yes, absolutely, especially because after the September 18th meeting, the November meeting is the week of the presidential election. It'll actually be the day after the election. It'll be a unique Wednesday, Thursday FOMC meeting. So my expectation would be look for that first interest rate cut September 18th, possibly a hold in November, much like the ECB and other banks have done.
What would the election have to do with it? The Fed says that they're not politically motivated.
They absolutely do, and it is after the election, but I do think back to 2020, we were still in this realm of uncertainty for several days. We didn't know who won the election until Saturday of election week. We could be in for that type of chaos this time around. But even if it's outside of that election, look for the Fed, I think, to be very meticulous, very intentional. They don't want to cut rates too aggressively too soon. I could foresee a cut, a pause, maybe one final cut in December.
We'll talk to you plenty before then.
Can't wait.
J.D. Durkin, thanks.
Thanks.